Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with November 10th's report for November 11th's stock market session. Today was another resumption of the same thing that we keep seeing over and over, sell-offs below the 50-day and 200-day moving average. The only good news we can see here is that volume is below the 50-day volume average the past week. Each sell-off, and actually this has been the case since right around here in October when we had what looked like a possible reversal on extremely strong volume. That reversal has not worked out yet, but we have been consolidating sideways, which is neither bearish or bullish on this sub-intermediate term. It's lateral. Short term we're down, sub-intermediate we're lateral, intermediate we're down, and long term we're definitely down if we go back here to October. So the key to remember is that we are still in a very significant downtrend. Going long is still wrong. I know how to make the big money in the stock market. I've been doing this since 1996 when I was a teenager. I have studied breakouts from the past, from 1900, actually 1890 to now. I know what to look for. It isn't there exactly right now, but when it is, I will not miss it, and we will make 100, 200, 300, 500, 1,000, possibly 2,000% returns again, as long as we don't go socialist. If we go completely socialist, I don't know. Anything's off because this country's been a capitalist country its entire life. So I hope that my paranoia is not warranted. Now, I want to go to this low volume selling. I want you to notice that there was low volume consolidating from March to June in the S&P 500, but yet we still rolled over and sold off. And as we consolidated from July to September right here, below the averages on lower volume, we sold off again. Now we're doing it again on lower volume. Could we sell off? Yes. But we've been in a downtrend, like I said, since October. And since the October highs, we're still down over 40% on the S&P 500. Now, in my worst account, which is my girlfriend's account that she gave to me in November 2007, I am down 7%. Compare 7% to the 41% here or the negative 35% in Jim Cramer's Action Alert portfolio. BigWaveTrading.com is set up on facts. We use facts to make money. We use facts to make money on the short side and downtrends and make money on the long side and uptrends. Since this has been a downtrend, we have been operating on the short side, occasionally testing the waters with the long side. We have two great longs, one that's up 83% and one that's up 33%. However, the majority of the gains from 20% to 70% are all in shorts that I've taken since the month of May. So these are quick short-term games, and even though this particular cycle I am heavily in cash because the breakdowns were not perfect like they were in early 2000, I'm going to have to wait till a great bull market. But right now, it's still a downtrend, and I want to emphasize, if you guys are not doing any trades, it is okay. You do not need to be going short and making money or going long and losing money right now. You can stay 100% in cash and kill the 40% loss in the market. And when the market does turn higher and we do get our nice base on bases, cup with handles, flat bases, not wedges, excuse me, high tight flag patterns, and other ascending bullish bases, and when they break out, I will go long those stocks. If you do not know what to look for, I have a past big winner section where I go over all of my own personal longs that I have personally taken that still existed on the telecharts that I could then show you. Some stocks from 1999, I would say about 20% of them were not available for me to show you. So I can't show you the perfection of stocks like Commerce One. I can't do it. Or Engage. I can't do it. So we have to deal with what I have left, but 2003 will show you the beauty of the charts, especially 2002. If you study Cena, NetEase, Sohu, Stratasys, United Online, Garmin, which were all stocks that I went long early on in late 2002, after I told a CFO of a very big company that we were probably never going to rally again, which shows you once again when you normally give up, that's when the market rebounds. you can look at those chart patterns and see what they look like. And until you see that, there's no way to be going long. Now, what would they look like? Look at GB. Look at how GB here has green BOP in August, July, and in September, October, and now in November, BOP has exploded higher after the big, huge accumulation day right here on 11/5, and since then we now have max green BOP, as you can see here. 1, 2, 3 days of max green BOP after a BOP surge. So these charts are out here, and now let's look at ASET. See all the green BOP setting up in this base? It's not perfect, but the point is that there is stuff out there. Here's OSIR. You see the green, a lot of green. It's all medical, but it's out there. VITA, it's starting to work on something. Eventually, we'll start to move higher, but right now, it's just not the time yet. Here's one that had an accumulation day today. It's just not time yet. GXDX, here's another one. Look at this one. A lot of green BOP, higher green BOP again, strong relative strength line, accumulation. We will have a bull again. But right now, we have to maintain caution. Now, let's go look at the Dow Jones Industrial Average. Going back to the indexes, you'll see another low volume sell-off on low volume. So right now, we're below the 15-200-day moving average, which means we stay bearish. Let's look at the United States dollar. Still looking great. Still building a flag here. Let me draw it really quick for you guys. My flag. It's like this. I'm not going to connect the points perfectly. And it's like this. So as you see this flag right here, when it breaks out, it should break out to the upside since it's already coming from a previous uptrend. And proving once again, waiting to buy futures when they're over the 250-day moving average or waiting to go short when they go below, you now have a 15% gain in the dollar. And then as you can see here, if you would have gone short here in 2006 to the 2008, let's say that you waited all the way till it turned, you would have gotten a 16% gain on the downside. And I know on futures you get huge margins, so you can figure that out. I've given up the futures game. It's not my style. So that's the dollar. Let's look at the NASDAQ 100, another lower volume sell-off. Let's look at the NASDAQ, another lower volume sell-off below the 50-200-day moving average, so we remain cautious. S&P 600, a nasty negative 2.34% day, which was worse than the 1.86 drop in the NASDAQ. And then the Russell 2000, negative 2.5%. It's just bad to see it like that. And let's look at, since the highs in October, how much is the Russell 2K down? 41%. So my negative 7% loss in my worst account doesn't look too bad compared to negative 41%. And when the Action Alert portfolio is down 35%, I tell you what, you've got to realize who has your best interest in mind. I'm here to make sure that you save money in a bad market, and I'm here to make sure that you make a ton of money in the next bull market. Let me see how much time I have. I'm going to go ahead and wrap this video up. This is Joshua Hayes at BigWaveTrading.com reminding you that I have my finger on the market, and even when I have MS flare-ups or I deal with other issues, I am still on top of this game, making money on the short side when it is to be short and being in cash, and when the next bull market comes, we will make a lot of money. I guarantee that. Look at my past returns. Don't think that I can't do that again, because I will. Especially with the VIX. Let me go ahead and go over to the VIX really quick. With the VIX at 59.98 after hitting 90 almost on this day, 89.53. So this too shall pass. We will have another bull market. This is Joshua Hayes of BigWaveTrading.com. Good night.